On today's show, 3 questions. Number 1, where will prices go? Number 2, ding dong, is the Wicked Witch dead? And number 3, should insurance companies be allowed to own dental practices?
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. I'm Matt.
I'm Taylor.
And I'm Rabih.
Yeah, you are. Dream team, back together. No matter who we have on the team on the pod, I think we always just say dream team. We're just all a dream team. How are you guys?
You make the dream and the team, man.
We were just talking about car purchases and how you guys were over-optimizing your purchases because you both recently purchased cars. Any comments on that before we jump in?
All car purchases aren't worth it. They're just not. In the end, you just slave over them, and then a week later, they're not a new car, and you're like, nah, not that big a difference.
Yep. Super exciting for a couple of days.
In hindsight, I'm like, why did I spend that much time and worry on it?
You more than most people, but that's just your personality, and it's sport to you. So, okay, let's jump in, Rabih. Where will prices go? What are we talking about today?
We are still talking about the only thing that's moving the market for the last 3 weeks and looks like for the next 3 weeks, and that is the Iran war. We haven't been getting we've been getting economic data. We're getting non-farm payroll. Tomorrow we're going to get, for Friday, we're going to get unemployment rate. The week after we're getting inflation. We are getting data, but the data is within expectations. The economy is in a certain equilibrium. No single data point is providing a surprise. All the surprises and all the uncertainty are coming from this macroeconomic supply shock related to oil. And that shock, the motivations for it is all political. So with that, a lot of the time, the noise in the market that we've been observing lately has been coming from just how the situation in Iran and the war with Iran is unfolding. So last night, we're recording this on a Thursday. Happy Easter's, everyone.
But, we should have mentioned that.
We should have mentioned that. So on Wednesday night, the president had a speech to give the American public an update on the war in Iran. And watching the market behavior for the 2 days prior to the speech and then during the speech and the day after the speech was very peculiar, and it was very interesting to try to decipher where the market is positioning itself. 2 days leading up to the speech, the markets have recovered really well, but it couldn't just only be because there were rumors that the war is ending, but because the quarter is ending. A lot of short sellers are trying to, capture their gains. There are a lot of other systematic market stuff that happen in the background at the quarter end or at month end that contribute to the fluctuation in prices. But then when the president jumped on his speech that night and stated that the war is probably going to last longer than what was initially promised. It's been running for a month. They're expecting another month, according to 3 to 4 extra weeks, according to the conversations. The market quickly reverted course, and whatever we were seeing on the last 2 days kind of reverted. Stock prices on futures, overnight prices actually went down, and then this morning, they kind of stayed in the negative, but they lessened their losses due to a big piece of news that says that Iran and Oman are trying to coordinate and create like a toll booth on the Strait of Hormuz to make sure that they monetize the passage of, the ships that are passing. This is just the political summary. What we are interested in is how does that impact our portfolios? A globally diversified portfolio that is looking for long-term growth in earnings and improvement in quality of living that gets reflected into, the pockets of the investor. Multiple things that came to mind. It seems like now that the oil shock has been going up, it looks like this is not going to be just a one-time shift in prices, but this would have, lasting repercussions. or hopefully not inflationary pressure going forward. So I wanted to go and look at everything that comes out of the Strait of Hormuz, because anything that comes out of there is now more expensive, and see how would that trickle down into prices in the US. And it seems like, unlike the situation in Russia and Ukraine, where you had a lot of wheats and a lot of crops, oil and gas, along with petrochemicals, plastics, fertilizers, and aluminum and other chemicals, are the stuff that come out of the Strait of Hormuz, but from not as big of a magnitude as the Russia-Ukraine war. But we would expect prices to go up in these categories. I actually got you guys some data on commodities and their year-to-date growth. So the stuff that aren't really affected, like wheat, soybean, cotton, the stuff that are agricultural, well, they went up, but not to the same extent as the other stuff. We have wheat going up 17%. And by the way, when I say wheat is up 17%, it doesn't mean like your bag of flour is up 17%. Those are the futures for the wheat. So wheat is up 17%, soybeans up 13%, cotton 9%, feeder cattle like 6%, corn is up 2.7%, sugar is flat. So we can all switch to all sugar diet if it's squeezing our pockets.
Perfect.
But
I never switched off it, Rabih.
Taylor's like, I've
never
been
switched it out.
buying futures in that forever.
So agriculturally, not as big of an impact. But then you go to the metals and you can start seeing the diversion. Copper is down for the year like 1.3%. And copper is a big indicator for future economic growth. Anytime the economy is growing, you need more copper. So that is going down. Steel is flat. Silver is up 1%. Gold is up 7% for the year. But aluminum, which comes out of the Strait of Hormuz, is up 15% year to date. As for energy, natural gas is down 24.4%, and I'm not 100% sure why, because 20% of the natural gas of the world is exported out of Qatar that is stuck in the Strait of Hormuz, but also there could be cyclical aspects coming in. Summer is coming abroad, less heating needs. Whereas so natural gas drops in the summer, goes up in the winter. Gasoline drops in the winter, goes up in the summer because people travel more, right? This is the cyclicality of these. Heating oil is up 103. Crude oil is up 93%. Gasoline is up 88%. Brent is up 76%. And then coal and ethanol are also up because there are substitutes. So as you guys can see, the Strait of Hormuz so far has a spillover effect, and we're seeing it in prices going up, but mainly in energy products and in aluminum. How will that transfer over to the US is going to be a question of time. We will have to see how the CPI report comes in a month or two, and start seeing whether the stuff that we measure, the cost of food, the cost of gas, the cost of shelter, the cost of healthcare, etc., are those ticking up? And if they start ticking up and moving from one category to another, this means we've got another inflationary wave coming up. It's a wait and see. Something that I want to bring up, but do you guys have any questions about these?
No, I was actually just going to ask you about the inflationary wave, because it kind of reminds me, as you're describing this, kind of reminds me back during COVID when all the global supply chains were interrupted and we were kind of in that, like, the market had gone up and we were like, what the heck's going on? Like, why are the markets up? Like, everything's going to be, and it was kind of like, hey, there's going to be a wave here. We're going to see this come. And then, Cash GPT predicted the high inflation.
No, Rabih, you can't, you don't choose your own nickname. People still call me the Mountain, so deal with it.
Okay, I'll deal with it, but don't put predictions into my mouth. Taylor,
that's what you rate. Oh, you had a problem with the name.
About.
You had a problem with the prediction. Yes. You like the name Cash GPT.
It's fine. It grew on me. I'll trademark it.
Okay.
So Taylor, is it also an oil shock like what happened between 2020 and 2022? Is it a supply shock that raises prices? Yes, there's no doubt about it. What differs is, where does the economy stand right now versus where it stood in 2022? In 2022, we were coming out of the global pandemic with a lot of money in people's hand. We had 3 rounds of stimulus checks. We had the central bank expanding their balance sheet and financing and providing liquidity in the market, the largest size it has ever done on record, right? And then we had like the global economy opening up back quickly, and there was pent up demand and there wasn't enough houses. So the economy was sitting on a state where really there's no upside room for growth without creating inflation. We were at the upper limit. We're already saturated with cash, and that is just the right environment for inflation to ramp up out of control. Right now, I'm not saying we're in a recession, but we are at an equilibrium level where there aren't really more jobs being created. Some people got fired, but others didn't really get fired. And at the same time, if suddenly there is an inflationary surge from the outside, we have a little bit of an upside to go before, it gets out of control. So how will it transfer over and carry over that inflated prices in these assets that we're observing is a matter of how it interacts with this economy that's not running at full capacity, but it's also not in a sleepy zone. It's a normal balanced equilibrium. So that is whether the inflation will show up. Something that I want to bring up is it was related to the speech yesterday made by the president. And the president, for geopolitical reasons and for, having cards in their hand for when they meet in China, all these stuff, mentioned that they might not really care about opening the Strait of Hormuz, and they would advise other countries that wanting oil to come to the US and buy oil from the US instead. That was a very big calling to try to shift the political blame. I went ahead and looked at the numbers after the speech to make sure, is this really a feasible situation out for the US economy? Can we really forget about the fact that the Strait of Hormuz is shut and let the US produce oil for the rest of the world and distribute oil to the rest of the world? Unfortunately, this is not the case. I got global production and global consumption numbers for oil, and the US is the global consumer of oil and the global producer of oil. In 2023, the US produced 22 million barrels of oil a day on average and consumed 20 million barrels a day on average. So there was an extra of 2 million barrels a day extra. In 2024, the US produced 22 million barrels also, or around 23, and also consumed 20 million barrels a day. In 2025, the US ramped up its consumption a little bit to 23.6 million barrels of oil a day, and still consumed on average the same amount of 20 million barrels a day. And in 2026, it seems like the trend remains the same. Global consumption, on the other hand, is between 102 and 107 million barrels a day. So the US only contributes to 25% of the global supply and 25% of the global consumption. The fact that the US only produces 2 million barrels a day on top of what it consumes tells you that the US can't really sell the rest of the world systematically. The Strait of Hormuz per day allows for 5.4 million barrels of oil to pass through. Right now, all the ways that you can bypass the Strait of Hormuz, at most, out of these 5.5 million barrels a day, kind of takes away 1.5 million barrels. So there's a 4 million barrel a day deficit, and the US can't really fill that gap.
They just don't have enough of a surplus.
100%. So what does this tell us? Well, this tells us that, this economic proposal in a speech is not an actual policy. It is noise. Systematically, the US cannot cover that gap. And that means oil prices across the world, as well as the gas prices that we see in the US, are going to remain high for the foreseeable future. So just setting expectations, how will that affect shipping costs? How will that affect food? How will that affect travel? How will that squeeze the pockets of Americans is yet to be seen. But it seems like we have entered a new economic regime where that regime is identified by higher energy costs for the foreseeable future.
Couple of things, Rabih. Number one, this is for the people. If you didn't listen to that and think, I don't want to come see Rabih, a Cash GPT, speak at the Dennis Money Summit, I don't know what's wrong with you. If you're not thinking that you're not thinking, I need to come hear this guy speak live, Midway, Utah, June 11th through the 13th, DennisMoneySummit.com. That's what I'm thinking every time you speak. Secondarily, Rabih, cost me $80 to the day to fill my car up. Mm-hmm. So I'm feeling it. That hurt. And I have a little buddy kick scooter that I ride around, a little white scooter that I've tried to pull out. But as now you can see behind me, it's snowing. So I'm personally feeling this pain that I can't even ride my scooter right now to lower my gas costs. It's a problem.
It is a problem. There is one argument that could be made that, hey, midterms are coming up. They'll figure out a solution before that. So I also looked into that a little bit. I wanted to talk about the strategic reserves the U.S. has in terms of oil. Can the U.S. just decide to flood the market with oil and on the gas pump drop it down? So what I have to say is that pre-2022, when, prices went up and the Biden administration tapped into that reserve, the amount of reserve that we had was much larger. It was around 1.2 billion barrels of oil. This is how much crude oil the U.S. had as an inventory. After 2022, this has dropped down to around I would say, 900 million to a billion. So we lost like 200 billion of these strategic reserves of oil. But the oil is split into two categories. The first category is commercial, and this is the portion that they would flood into the market. And the second category is called strategic petroleum reserve. And I wouldn't think those would, be used to lower the prices at the gas pumps. Those are used for our oil, this military industrial complex that we have in this country, for it to stay moving, right? This is used to ensure national security of the US. So they would not tap that. What they would tap into is this inventory of around 400 to 450 million barrels of oil as an inventory. Well, if in every single day we are 2 million barrels, we produce only 200 million barrels, then we consume. Well, if you divide 450 by 2, it means if we deplete that reserve, it will take us 225 days to build it back up. So they can flood the market with those 450 million barrels right before the midterm elections, but that would mean their hands will be tied for another 225 days until that reserve comes back, and then they can dump it again. So I'm saying we're in a new regime where the energy costs are higher, and we still do not know how will that impact pockets, how will that impact consumption, and how will that impact stock prices. But what we know is that it does not have to be stable at this level. They can drop it down and then wait until the reserve fill back up and then drop it back again. And we will see with time how that impacts. But
and to that point, Rabih, am I valid in being a little confused as to why we're not down more on the markets? S&P's down 4, Dow's down 4, Nasdaq's down 6. I guess we talked about this a little bit last week or the week before. You just mentioned it's a midterm, all this stuff going on with Iran, all the stuff with oil. Am I the only one that's a little bit surprised we're not down more?
No, it is my personal opinion. No one knows, right? My personal opinion that we are fairly at fair prices. The economy is in still strong standing. Right? The economy is still in strong standing. We are seeing a dark cloud coming our way with higher energy prices. We still do not know whether that dark cloud is going to just rain or dump snow on us, right? This is where we still do not know. So the market has priced in somewhere in between a big snowstorm and in between just a little bit of drizzle. And that is why the market only has dropped by, within the correction territory of less than 10%. If the data and inflation starts coming up in the next month or so as, this is infiltrating the economy, this is spreading out, this is creating
long-term effects now,
then you would see a further correction. But I think it's fairly valued because it could go either way depending on how we react.
Got it. So it's still in a wait and see kind of mode right now, down slightly. We had a huge jump the other day that brought it back from the numbers we mentioned last week or the week before. Yeah, I'm with you. It feels odd to me with how, and maybe this is me falling prey to how scary the news is, right? This is kind of what this is the noise. And then you go and check the numbers and you're like, it feels like it should be down way more based on what I'm seeing on the news, but it's not. So
it's not. If you look at the numbers, it tells you one thing very clearly. This is not any different situation than other market pullbacks we've seen. This time it's not different.
Yeah, it's good. You navigated that noise so well. Taylor, anything you want to add to this for CashGPT?
No.
Any predictions you want to request from him?
No.
Is your light okay? Is your light up there?
I know that just like jumped at me.
You handle it like a pro. You handle it like a pro. It literally jumped at you. It's like a jumping spider at your face. Okay, well, let's move forward. Taylor, ding dong, is the Wicked Witch dead? I know these are two favorite things, Wicked and student loans. So you found a way to bring them together. Let's hear it.
I found that you guys always bring me on this podcast when there's updates with student loans. I don't know if that's...
You're the resident student loan expert.
But I'm sure everyone's tired of hearing me talk about student loans. So I was like, how can I make this more interesting? And I thought about The Wizard of Oz and Wicked. So, Rabih, have you ever seen The Wizard of Oz?
Yes, but probably over 20 years ago.
Okay. Well, spoiler alert for this. It's been, I mean, what this Wizard of Oz came out over 100 years ago.
We are beyond spoiler alert
Right.
level.
And Wicked is a recent movie, but it's an adaptation from a play that's been out for over 20 years. So
Yep.
if you haven't heard about them and you still want to, you can skip ahead.
Yeah.
But
this is going to spoil something for you. Go ahead and just turn off the pod right now.
so we're going to see if I can land this plane and this analogy plane.
Hang on though, really quick. Anyone that's listening that's like, no, like there's not a person that is alive that's like, don't spoil this for me. It's been 20 years, but I'm still going to wait to see it. So I think we're fine on this one.
So in the story of The Wizard of Oz, there is the protagonist Dorothy, and she gets swept up in a tornado and comes to a magic world called Oz. And in this magic world of Oz, there's a good witch named Glinda, and there's a bad witch, the Wicked Witch of the West.
Yep. Of LA, yeah.
Dorothy kills her sister with her house, and the Wicked Witch is mad that Dorothy killed her sister. And the bunch of stuff happens, and at the end, Dorothy ends up killing the Wicked Witch so that she can go back home to Kansas.
I'm so excited for you to land this plane.
So, funny when you try and describe that plot because that makes zero sense.
None of it.
In today's society, if this Wizard of Oz would come out, the amount of like YouTube videos about the plot holes and how terrible the story would be, it would be amazing, right? Because it is a very wild story when you think about it. But anyways, in this situation, the save plan is the Wicked Witch of the West, right? So on Friday night, which is the classic bad news dump, right? The U.S. Department of Education released a release of what's happening with student loans, right? And basically they came out and said, indeed, in fact, save plan is dead and it's going away now, and we know when, right? So the update is that starting July 1st, servicers are going to release issue a notice to all borrowers that are on the save plan that they have 90 days to get off the save plan. So by late September, you will have to be off the save plan one way or another. Now, we have known for a while that this is coming, but it's always been July 1st, 2028 or sooner. And we haven't known when sooner is going to be. Now we know when sooner is going to be. So the save plan is dead and it's going away, and you have to get off of it by end of September, 90 days from July 1st. Right?
So is Trump Dorothy? I don't know.
No. So the Department of Education in this sense is
Dorothy.
Is the man behind the curtain.
Oh, got it. I like that.
Right? So what you find out in Wicked, so Wicked is the backstory of Glinda and Alphaba, which is the name of the Wicked Witch of the West. And what we find out is in the Wizard of Oz, Wicked Witch of West is killed and you think she's dead and she's gone. But the big shock, the big reveal at the end of Wicked is that she's not actually dead, right?
What?
And she faked her death and she's riding off into the sunset, right?
She wanted to retire.
And the whole time, right, the Department of Education, or the wizard was actually the bad guy. The wizard was the one behind the scenes, pulling all the strings, and everything that he was doing was evil, right? So in this analogy that we're saying that the save plan was the Wicked Witch of the West, right? Because they came out and said this illegal save plan 7 times in the update is dead and it's going away, right? But what's happening is you can, starting July 1st, get on the new plan, which is called WRAP, right? And call it what you will, WRAP is basically the save plan, right? The only difference between WRAP and save is the calculation for your payment is a little different. And instead of 25 years of payment, it's 30 years of payment until you achieve forgiveness.
And the calculation's a little different, right? As far as what it's a little bit less favorable on WRAP.
It's less favorable, meaning the payment's a little bit higher.
Yeah.
Right. On save, it was 10% of, well, it was 10% of your discretionary income, which was calculated at 225% of the poverty level based on your state and your dependent size. Right. This is just 10% of your AGI.
Mm.
So the calculation for SAVE was convoluted and confusing, but it was a little more favorable, meaning you paid a little bit less. But at its core, you're still paying basically 10% of your AGI, right? So it's a little bit different and it's a little bit longer. But the most important thing about SAVE was if you made a payment and your payment was low enough that you weren't covering the interest, any of that unpaid interest was being canceled or forgiven. And that's still here with WRAP, right? So even though SAVE Plan is quote unquote dead, right? It's actually
Like
really
the witch.
like the witch. She's not
Actually dead. Oh my
Not
gosh. You
actually
did
dead.
it. You did land that plane.
And honestly, the WRAP plan and the SAVE plan, they're still a really, really great option for who they were created for, right? Now, the problem is the SAVE plan, due to the man behind the curtain, has not actually been in effect for the last 5 years, right? It hasn't been working. No one's actually made you recertify your income. There's been multiple forbearances. No one's had to actually do the SAVE plan as it should have been done, right? And so everyone believes that the SAVE plan just means zero payment, which that's never been the SAVE plan. The SAVE plan has always been 10% of your discretionary income at 225% above the poverty level, right? But because of the multiple forbearances and the back and forth with the court case, no one's actually had to actually implement the SAVE plan with current income.
People got used to the zero payment.
Right. So people associate SAVE plan zero payment, but in reality, the SAVE plan was never that, right? It just never was able to take flight on its broomstick, right? It wasn't allowed to flourish.
He's nailing this, Rabih. He's nailing
now,
this.
Glinda, or the WRAP plan, is in effect, but it's functionally the same thing, right? Just a little bit worse. Sorry for all you Glinda lovers out there, right? So the idea here is, if you have been just kind of waiting and seeing and kicking the can down the road and just hoping that you'd never have to pay, unfortunately, that's ending come September. And you will have to make a decision. If you are on the SAVE plan, you are either going to have to switch to the WRAP plan, you're either going to have to switch to the new standard plan, which is just a fixed loan of 10, 15, 20, and or 25 years.
And is that what happens if they don't do anything? It automatically just moves them?
Yep. If you do nothing, if you just sit there and you're like, no, I'm not going to do it until they make me, they will automatically make you switch to the standard plan, which is a fixed student loan plan based on a fixed term.
Probably not going to be ideal for you.
Right. So you have private refinance, WRAP. If you are an existing borrower, you still do have IBR, right, as an option, or you can be in the standard plan. Right. But one of those four things has to happen between now and September.
So, Taylor, what resources do they have? If a dentist is out there listening and they want to go explore these options or understand the differences, what's the best way to do that?
Well, again, we are more than happy to go over your specific situation with you. We actually have, I think it's like dentistadvisors.com/student loan, and you can go and schedule a student loan consultation if you're interested. You can just go to the book free consultation link if you want to discuss. I mean, there's multiple companies out there. I mean, Student Loan Planner, they've been on the podcast. We love them. They do a lot of great work.
Yeah, they do a great job.
You can reach out to them. They'd be more than willing to help you. But at the end of the day, I think at its core, you need to think, well, if I'm on an income-driven repayment plan, who does that help, right? Well, it's based on income. So if I have low income, I'm going to have a low payment. If I have a high income, I'm going to have a high payment. And it's never been easier to calculate what that payment's going to be because, say what you will about the new plan, it's very simple, right? It's just 10% of your adjusted gross income. So if you made $500,000 last year as a dentist, right, then you're going to have to pay $50,000 a year for your payment for your student loans, which is roughly $4,000 a month, right? So you can go out there, and the nice thing is private refinances with interest rates being lower are actually pretty favorable right now. In most instances, for most people coming out with student loans, they can get 1% to 2% better on a private refinance than their current interest rate, right? So if you look at your student loan balance and you kind of go out there, see what a private refinance is, a lot of times it'll be cheaper than what your actual income-driven repayment plan would be at this point because you've had 5 years for your income to grow, right? So there's a really large subset of people listening to this that honestly, they should probably just go do a private refinance, right? But if you have a low enough income, right, and a low enough payment, then there's still a case, as there was previously, to be on an income-driven repayment plan for a handful of years take advantage of the interest savings, and then switch later.
Yeah, I think to your point, definitely call us. We have an amazing partner that we help with this all the time through our partner. We don't do it internally, but we have an amazing partner we can connect you with if you're looking for private refinance deals. I think the biggest thing, Taylor, that you're highlighting is it's time to get your head out of the sand at this point. You're forced to think about this. You've had a zero payment for a while or a really low payment for a while. That's great. Hopefully you've taken advantage of it, but now is the time right now in early April to be thinking about July rolling around, or really the fall when it goes into effect, reallocating your cash flow, thinking about what you're going to do with this new payment that's going to happen.
And it's probably going to be several thousand a month,
Yeah.
regardless of who you are, right? If you're a dentist and you have normal student loans, you're going to be several thousand a month in a payment,
Yeah.
right? And that's just a reality that you got to bear. And hopefully you've been saving and doing things with it. But yet another point to your resources, our marketing team has put together a great landing page. Again, dentistadvisor.com/student loans. We've got podcasts, we've got webinars, we've had multiple resources that if you just want to look into it yourself, it's all there. But if you want more of like a high touch interaction, again, we would be more than happy and we would love to jump on a call with you.
Happy to help. Yeah. My last question on this, and I want to get Rabih in here. How many times did Shelby hear that analogy? You had to refine that a little bit. Did Shelby help you with that?
She did not. Shelby could care less about what I do for work. So if I bring up what I did for the day, she will just glaze over. That is all just off the cuff.
That was amazing. Well done. Just from the genius brain of Taylor.
So all of you musical theater lovers out there,
yeah,
listen to this pod. I'm sure the Venn diagram is really big. That probably just hit home for you guys.
I will say I did not have finding the intersection between student loans and Wicked on my bingo card today. So I'm really glad we did it. Rabih, any thoughts on this before we finish the last section?
No, I love it. I'm glad Taylor here knows all about this stuff so I can go to him to ask him. It just seems like the witch had to even fake her own death and she still couldn't get away out of her student loans. So this is where we are.
You can't. Yeah, that's maybe what she did. That's the ultimate wrinkle is the Wicked Witch had a bunch of student loans she was trying to get out of.
Yeah. From her University of Shiz.
Yeah.
Because the university in that movie is called Shiz. So
I love it.
That's great.
That's so good. Well done, Taylor. You won today. Last topic here. This will be quick. I just wanted to bring up truly a question. Should insurance companies be allowed to own dental practices? So this is this isn't like super recent. This happened actually last year, but then the ADA at the end of it was last summer that this happened, and the ADA made kind of an official, filed an official letter about this. So Delta Dental, you know them, you don't love them, but we all know them. If you're a dentist out there in the space, they informed the Wisconsin Dental Association last year that they were going to purchase, or they were making a purchase, a group called Cherry Tree Dental. This was mainly in Wisconsin, but they've got offices in 20. At the time, it was 25. They're up to like 40 locations now. So they're in. Let me see. It was mainly in Wisconsin, but also Illinois, Michigan, and Minnesota. Centered there in the Midwest. The ADA has kind of made this official letter as of last year of their issues with this. So Delta Dental, being the biggest dental provider payer in the dental space, bought this 25 to 40 location now practice. It's gone through. So it's happened. Their claim, Delta's claim, is that this is their way to help in rural areas and really help ensure access to care. That's kind of their argument. The ADA makes a multi-pronged argument. I don't think it's any shock to anybody. Pricing, monopoly, competition. They've actually made calls for the FTC and DOJ to actually investigate this. So I just wanted to pose this question. This is not unique in the medical space. This is actually a huge problem and talking point in the just general healthcare space of these big conglomerate companies owning kind of like every point of contact when it comes to a patient. I just want to get your guys' thoughts, at the risk of getting political, your guys' thoughts on this now entering dentistry and just your opinion on it.
I mean, it's always a little spooky, right? When that happens, specifically speaking on behalf of my clients, it's like, the bigger these organizations get, the more power they wield. And if we let insurance reimbursement companies buy dental practices, they can obviously give more favoritism and special pricing to their in-network dentists versus the out-of-network dentists. And then it just makes it harder and harder for the solo practitioner to survive, right? So, I mean, selfishly, not knowing a ton of details on it, it's like you always root for the underdog in these situations. So it's hard not to side with the ADA without, diving deeper into it. But that's my reaction. And I'm sure most dentists you'd ask would have a similar reaction to that.
I would agree. Rabih, let's get you in here.
Yeah. Well, this is now happening in dentistry, but it happens across all markets where,
Yep.
mergers happen. In this situation, it's, a horizontal integration or a vertical integration happens. And now you've got a big player that's shifting up the competition. Well, what comes to mind is asking that question to the dentist, the business owner. What was your competitive strategy to start with? Because this new big player that's coming in, as Taylor mentioned, might be competing and differentiating themselves on cheaper costs because you're in the network or whatever. Has your strategy in your dental practice to be the cheapest, right? If then you're going head to head with them. If your dental strategy or business strategy was not to be the cheapest, but have the best relationship with your patients, giving them the peace of mind, creating a community, etc., I think you are competing in different games and just focus on what you are doing.
Yeah, I totally agree, Rabih. I think it forces not only this is another level of what's happening with DSOs and corporate dentistry as a whole. To your point, it does force dentists to be more thoughtful, intentional, and strategic with their business. Totally agree with that. I just think as a core principle, I struggle with this concept and this being kind of being allowed because of what it does. Like just take Wisconsin most of these practices are in Wisconsin. I think I just worry about what this does as a whole. If this were to like now permeate the space and grow and get bigger where they're allowed to buy up more practices all over the country, just think about what it does to doctors' income and patient care and just,
Well, and 9 times out of 10, they start out with lower prices, right? And then once they squeeze out the rest of the market, then they increase their prices.
Yeah. Well, then
Right.
they have the biggest problem that I have is just the pricing control they end up having where this is the whole reason we have antitrust laws in America is to, our country's based on free market capitalism for sure, but we have things in place like antitrust laws to allow competition to thrive because that's really what gives the power to the end, in this case, patient. So anyway, I saw this. It's a little bit, again, I stumbled upon this as we were doing some research and thinking about this episode. And, it definitely worries me from, working in this space more for the dental community, patients and for doctors and staff. Something like this is definitely a huge red flag, in my opinion. I think it's a huge problem because I think the only thing maybe worse generally than DSOs is probably insurance companies. I think we can all agree to that, right? Maybe. Anything else on this, guys, or any of the thoughts we've talked about on anything?
No, I like it. But I don't think it's as pessimistic. Like now it is a fight for maintaining your client base, your patient base, your market share. But the good news is that that piece of the pie, the whole pie is still growing, right? If the dental industry and the amount of teeth in this world or in the US that needs servicing is increasing every single year. So the market share, the whole pie is growing. Your job is to make sure that your slice maintains its standing. That's
Yeah. I love the positive. Rabih, the optimist.
Yeah.
I love it. And I agree that I think this is not like a doomsday scenario. It's more of just be aware of this. And certainly I back the ADA and the dentists who are wanting to fight against this. 100% agree with this. We're huge proponents of small private practice ownership. That's what our whole business and message is based on. And this goes against that. But I'm with you, Rabih. I don't look at this and say doomsday scenario, just definitely something to be aware of and cognizant of. Taylor, anything else on this?
Yeah, just wondering if the insurance companies are Madame Warble in this analogy. Right?
Oh, maybe he's just going to continue with he's like, they like that so much. Let's keep it going. I can just imagine now for all the team meetings for a while, Taylor's going to be like, this reminds me a bit of Phantom of the Opera. Oh, it's really good.
Well,
Love it.
I hope that somehow that plane did not crash land
No.
and it, landed, but I tried to make the student loan update a little bit more
I
entertaining.
loved it. I loved it. Now people are going to be clamoring for your next update and trying to think. Now you put pressure on yourself because, like, what are you going to do next? Right? The sequel's always the harder one. So, okay. Well, this was great, guys. We've already mentioned this, but if you're needing help with anything we talked about, in particular student loans or really anything to do with your money, financial planning, investment management, taxes, accounting, we do it all. DennisAdvisors.com, book free consultation button. Happy to talk to you. We'd also love to see you at the summit. As I mentioned earlier, DennisMoneySummit.com in Midway in June 11th through the 13th. We'd love to have you there. For now, Taylor, Rabih, thanks for being here, sharing your wisdom as always. Everyone, thanks for listening. That was our 2 cents. Till next time, bye-bye.